Welcome to the Johannesburg Stock Exchange then, as we get to unpack the market picture as much as possible. Thank you so much, Nzinga Qunta, there for holding down the fort. So it's been a positive tilt to the market picture then on this Monday afternoon, especially. Things started out fairly positively out in the Far East. Only the Nikkei out of Japan going down 0.25%, but more than 2% gained for the Hang Seng and the Shanghai Composite in China. That, in fact, went up 2.6%. So some positivity filtering through there. That does come from the stimulus talk that comes out of the United States, perhaps even more so the fact that they're hoping that a $1.8 trillion bill is perhaps passed out there. There are a few issues at hand still at play with regards to that stimulus package, so it's not all rosy, but the hope and belief has meant that even the European market is fairly up in this lunchtime trade as well, ever so slightly, nearly 2 points in fact for the FTSE 100 out in London. The DAX of Germany and the CAC 40 of France also doing fairly well there. Locally, we're also seeing a big uptick there, nearly 0.75%. In fact, more than that right now for the JSE All Share at 55,603 points, going up on that front. The biggest gainers today, financials going up 1.3%, led a lot by those banking counters, which have gone up more than 2% as well. Gold miners as well as platinum miners have gone up more than 1% each also, which has meant that resources overall are doing very well, 0.75% higher over there. Industrials, 0.75% to the good, sitting at 0.73%, up 75,155 points there. Still good as well for the listed property sector, so all green across the board. In terms of the companies that are sort of leading, the oil share headed higher this afternoon as well. The likes of Steinhoff as well, Hammerson and Fortress all gaining quite a lot there. Look at that, 32% higher for Steinhoff, 13% higher for Hammerson, with Fortress going up nearly 12% there. In terms of going down, then unfortunately you do have Roynet, Datatech and Afrox all sitting in negative territory, but not down by as much as the others that have gone up. Onto the commodities board, fairly red across this sector then as well. Brent crude price dipping down 1.1%. It seems that production is coming back to the Gulf of Mexico, so US producers of shale gas and oil are certainly coming back to the market as well, because it does seem then that Hurricane Delta has perhaps weakened for the most part. At the same time, the issues out of Norway have seemed to have subsided, which means that they will continue to put oil back into the market there as well. 25% of its output at some point was getting hammered, so that's back into the market, so the price goes down ever so slightly. Platinum as well going down 0.33%, not much by way of demand. Gold price still hovering above 1900, so still a good mark there, but also falling off 0.33%, with silver seeing a similar fall, $25 a fine ounce there. And your currencies, weakness as well for the local currency, perhaps a little bit of strengthening in that US dollar. It all actually comes from the yuan having weakened ever so slightly a little bit earlier on today, as well as the Chinese central bank there decided perhaps to put in measures where they weren't too happy and they were a little bit uncomfortable with the spike that they've seen in the yuan then. So they've decided, well, we're going to try to limit the appreciation on that front. Having done so means that there's weakness for a lot of emerging market currencies, much like us as well. 0.5% down for the rand against the US dollar, 16.53 then against the US dollar there. 19.50 is how much a euro will cost you. A British pound, well, that's 21 rand and 53 cents. Let's have a chat then to Bright Kumalo from Vestact Asset Management now, as we get to unpack this market picture. Bright, thank you so much for the time. Appreciate it then. So the market itself, perhaps the stimulus coming to play, the yuan issue as well out of China, all of these certainly playing some part.
Yeah, you're right. I mean, on Friday, the White House announced that it's preparing 1.8 trillion US dollar, stimulus package to help with the coronavirus relief, which sort of makes sense. But again, this is the biggest yet. But it actually hasn't been also easy for the United States, because Nancy Pelosi, for one, is actually fighting Donald Trump on the stimulus relief package that has been announced right now, saying that it's going to cripple the economy. I mean, also, preceding this, this relief news, Donald Trump had said there'll be no further, relief for Americans, and he saw the market going down, and then obviously backtracked on his word and said, look, they were looking at a new deal, which will be totally different than the first one. And I guess the 1.8 trillion US dollars comes from, being the new deal, which is different from the first one. And as a result, again, the markets resurged, as we've seen, green in our screens from last week, Wednesday, Thursday, and Friday. Thanks, mostly because of those news of, the stimulus package.
One wonders, though, we haven't heard much out of the tech counters, particularly out in the United States. It seems things are a little bit more quiet and really based on the economic front. We're headed towards election out in the United States. Is that the biggest talking point? Is that what is shifting and shaping markets at present?
Look, it's going to be quite, volatile right now, maybe quiet. With a lot of volatility post the election, depending on who wins this election. But we've seen the polls. Like I said, they have Biden at 82%, favoring him to win, and Donald Trump the rest. Let's not focus too much on the polls. Let's just wait for the 3rd of November and see what happens and what the results are.
Yeah, we'll certainly see. That will tell really the big story. Let's get into some equity news then, and perhaps we could even stay out in the United States. Sasol and their Lake Charles project, that has been of massive question for quite some time. They say that project remains shut for now without damage from Hurricane Delta. So I suppose they're trying to stay as safe as possible with a project that they've now given off 50% of as well.
Correct. I mean, this has only been 2 months since Hurricane Laura. Talk about a Six Sigma event, right? 2 hurricanes within 2 months. But the good news here for Sasol and Sasol shareholders is that there hasn't been any major damage from both these hurricanes. There's been, electric problems here and there, but, the preliminary checks to see if, the plant is fine are still ongoing from the Hurricane Delta that you were talking about just right now. But the question is, this is a project that was supposed to be $8.1 billion is now north of $13 billion and has sold an equity stake at a much lower valuation, around $2.5 billion, already taking losses. But the project is still 99% finished. There hasn't been anything that has come out in terms of production from this project. So it makes you wonder as an investor, to say exactly what has management done for shareholders, by investing offshore, while in the United States here, hindsight, with the benefit of hindsight, one could say, just sitting down and doing absolutely nothing would have been a winner for Sasol.
Yeah, it's a bit scary actually in this aspect. Does this, however, still mean that the project remains viable somewhat at future when they do finally complete it and everything runs perfectly?
Well, it will definitely be viable for the next buyer of the project, not for Sasol.
Yeah, well, I think it's absolutely astounding how things actually change in this market picture as well then. You're quite right. Let's move on to something else then. Sun International's Carousel Casino out in the Northwest, they're looking to actually sell that. I mean, a lot of companies have had to perhaps, give off parts of their business amid COVID-19 as they try to shore up as much cash as possible.
You're right, Arabil. I mean, the focus has been, survival. So if you survive today, you make it to tomorrow, right? And that goes back to what you're saying, paying off loans or getting loan holidays where you can, getting rental holidays from, property managers, etc., etc. And obviously, this is to help show up that balance sheet that you just, made reference to. I mean, the Carousel Casino has the other problem of, they've got the casino here in Pretoria, which is now much closer to the people, so people don't have to drive up north to the northwest in Babelegi to actually enjoy their gambling. They can just go here, in Menlyn, Maine, to do their gambling. At Times Square, sorry. So, also that in itself is eating, a lot of their potential business or their old business that they used to enjoy from Northern Gauteng and, Pretoria. So those two combined with the coronavirus, not seeing a lot of activity for 5 months, 6 months, has hurt them a lot. And obviously it makes sense to get rid of, that piece of the business. for Sun International.
Yeah, look, if you've ever been to the carousel, you'd see just how old and dilapidated it actually is. And I suppose the investment into it as well has kind of told you that they're really not keen on perhaps keeping it as well.
Funny enough, I actually have been there. I have been to the carousel, but the hotel side, I mean, it's up north. It's the best you will get up north beyond Pretoria, I guess.
Yeah. Also true. All right, let's move on to another one then. Vodacom Lesotho. It seems that things aren't necessarily going too well. Dumelang Bagayesu isn't the call at present. The regulator there playing a part and saying, well, we'll revoke your license if you don't pay the 40.2 billion. Vodacom doesn't, and they wanted to get their license almost revoked.
Correct. I mean, so like you're saying, the High Court in Lesotho has granted Vodacom an interim order preventing, the regulator from suspending the license, meaning they could operate for now. But there's a lot of, uncertainty of what's going to happen in the near future. But again, let's talk about, the issue here at hand is the fact that, the chairman of, the Vodacom Lesotho, who happens to own, or lead a consortium that owns about 20% of the business, they hired an accounting firm that is owned by the sister-in-law of this chairman. So that's the initial issue here, and then the regulator says there's a conflict of interest which was not disclosed, and obviously that definitely is an issue. But my contention comes into where is the 134 million rands fine coming from? What is it based on? Because yes, Vodacom Group is a big international business, operating in South Africa, Kenya, Tanzania, etc., and in Lesotho. But in Lesotho, I can almost guarantee you that, as a percentage of revenues, that 134 million rands is a lot of money. So are they trying to punish or cripple Vodacom Lesotho, or they just making a statement to the Vodacom Group as a whole to say we could charge you guys whatever we want as a fine? Maybe 4 or 5 million rands would make sense, but 134 million rands is a little bit pushing it.
Yeah, look, it's not the first time we've seen a mobile company being sort of hit hard when it comes to flouting laws or whatever the case might be. Of course, MTN out in Nigeria has seen that happen quite a few times. It's a bit surprising, of course, with Vodacom being the biggest mobile phone operator as well in Lesotho, why they'd want to almost cripple them, as you say, which does get the board rolling, and it's quite interesting there. But Bright, appreciate the time, but thank you so much for joining us here on Point this Monday afternoon as well. Bright Kumalo there from Vestact Asset Management. Just some other news as well coming through at present from Stats SA. Manufacturing production, one would have hoped that this figure perhaps shows some sort of recovery in the local economy as things began to open up. For the month of July, we saw manufacturing production fall off 10.6%. That figure for August now stands at 10.8%, so a decrease. So still negative for South Africa's manufacturing sector in the month of August, even though things began to open up a little bit when it comes to the economy. A 30.6% fall for motor vehicles, parts and accessories, contributing around minus 2.7% to the overall figure. That was the big one there, with basic iron, steel, non-ferrous metals as well falling off quite prodigiously. Look, massive falls across South Africa's economy. Will the recovery happen? Well, the World Bank seems to think sub-Saharan Africa will get a better picture on the economy next year. And of course, right now we are seeing things get even worse. Sub-Saharan Africa expected to have a shrinkage of 3.3% when it comes to the economy. Hopefully that number gets a little bit better going into next year and the year beyond.